All right. Let me hope everyone is fine. Once again, your boy ThinkTankStormFX. Yeah, if you like this video, share it, subscribe to our channel so that YouTube will be able to forward this video to other people to be helped in forex, crypto assets, and furthermore. So today we're going to talk about something special. Our main reason here, and if you are in a hurry, you can skip this video and then come back later or save it later, then you'll be able to watch it in your free time. So today we're going to talk about something special, as I promised, liquidity and then physiology, our main topic. Yes, and our main reason here is number one, to cut loss, increase on your wins, identify liquidity in the market, and master the game of physiology, which is the same as in mental. How do you feel when you lose a trade? Do you stick on that trade, or you say these things are not easy? So today this is what you're going to be able to discuss, and I think let's begin without wasting time. First and foremost, if you like this channel, follow us, like, comment, share this video to other people also to be able to grow this channel. Yeah, our topic is today about liquidity and the physiology. First of all, I'm going to talk about liquidity. In your mind, how do you understand about liquidity? How do you understand about liquidity? As you, in simple terms, as money could be defined, in simple terms, in ICT it could be defined as all money above in the market, or position, or your stop loss, where you put your stop loss. And then liquidity, it may mean also money sitting on either on your position or where you have put the stop loss. You may ask yourself something: how to know where a market likely to draw in the market? This take a moment and answer such a question. But on my view, a liquidity always sits, or liquidity or market always fights for two things: liquidity, internal and external. As you're going to talk about moves, market moves depends on the liquidity setting up and below, either on equal highs or equal lows. You get. So when you continue, liquidity means mainly attraction to the market. Liquidity simply areas in the premium or discount prices. You get. This is where liquidity always sits, in the premium or on the discount prices. And then if you continue following the my outlines which I listed here, where could you be able to find liquidity in the market and likely to draw on liquidity? Where the market or where are the prices likely to go to, which direction? Number one, we have equal highs and equal lows, or support and resistance, previous monthly highs and lows, previous weekly highs and lows, previous daily lows and highs, previous scale zone highs and lows, FG, same as imbalance, and the PDRA, the series of institutional reference points. Those who embrace SMC or the smart money concept or the smart money strategies, I think they can understand that. You get their point. So if you have a book, you can also record this information. You get, because it will be able to help you in your future trades. We have two types of liquidity. We have the internal and the external, and market always move within two significant movements. It always moves within the internal and then the external. You get. The internal liquidity basically found in the PDRA, like FGs, imbalances where market makes some movement. I'll be able to illustrate in the reality picture. External liquidities found in the high and old lows in the market. You get. So you may take a question: when you wake up in the morning, and what do you do, or what do you want to see or look for in the chart? You get, you may answer this question in a few minutes. I think you can be able to answer that. But basically on my side, I always look out for the number one, which I look for, the balance efficiency. If the F gives imbalance liquidity voice market has printed, where B the big institutions have called the big move. We have targets, liquidities, odd highs and odd lows. In other words, you look for liquidity in the structure or in the market structure, which has been printed by the big institutions. You get. So as market continue moving with the liquidity, making different areas, sometimes market can manipulate you. Market can manipulate you. Thought predicting that has finished the internal, yet it has not. This is whereby market can manipulate some people in the market. This will wake up, you brought the account. You wake up in the morning, you set up your strategy, kumbe you are in the area of what? Liquidity. So you blow up your account, then you set up another one. Note, one tip I would like to give you on liquidity: once you market point out liquidity areas, you will make it and start improving your trades. Trade number two: trading does not depend on just being right more than 50 times at a time. It depends on the control. It depends on the control and control, cutting the losses quickly and then ladling your profits, ladling the profits trades to run into your directions. You get. So market always move in different areas. In this occasion means respect the power of risk management in each trade you make. So to continue all trading, to enjoy trading, learn how to manage your risk. Learn how to manage. As long as you learn that, you get your strategy, you stick to that, you'll be able to move. If you want to know about how you can be able to trade, how you'll be able to master everything in trading, you'll be able to get this concept. Always I have mentorships, where I have mentorships for only $50. Monthly classes, one-on-one, and you see how I'll be able to make. You see how I make my trades daily. So all right, so that's all about liquidity, and I'm gonna make something special here. I want you to see something. My structures, which I've already made here, illustrations on liquidity. Yeah, I have some illustrations on liquidity, which I've talked about the equal highs, or sometimes people call them as the resistance and the support areas, or where liquidity always sits. Market always make this movement, comes to this resistance level, comes back to the support level. Liquidity sitting here accumulating. At the same time, liquidity also moving to the upside resistance level, accumulating, accumulating. Here market has no direction, and the best way how I can be able to illustrate this, or you stick away from the market, always get a clear direction, either in the uptrend or the downtrend. You get either in the uptrend or in the downtrend. We have also trend line liquidities. I think this is how liquidity also accumulates in these areas. Market keep creating higher highs, higher lows, higher highs, higher lows, higher lows. This is how the market moves. For the beginners, market doesn't always move in a straight line. It moves in a gazetted way. Also, market also accumulates on these trend lines. Yes, market also accumulates from those areas. Also, has I told you, also on a higher highs and higher and lows. This is what I was meaning. Market may be able to make a higher high and a higher low, a higher high and a higher low. Market always sits on higher lows below and also higher highs above, whereby the more money, as I told you, liquidity is money. Where money is resting more, that's where the market keeps on going. You get. I also have the downward movement, or the bearish trend, which we call the bearish trend, or this is the bullish trend, this is the bearish trend. Yes. So market also keeps on giving us the structures as market is dipping down. Yes, so that's all about liquidity. And if you're able to mark that liquidity, so if you can be able to mark these areas in the market, liquidity, if you'll be able to identify, you'll be able to cut silly losses and be able to improve on your trading career. You get the point. Please, if you find this video useful and you've gained something, feel free to smash the like button, comment, share this video, subscribe to our channel to keep enjoying our content. If you want to also I'll be able leaving the link or the website which I've been able to get a book which will be able to help you, which will be able also to help you to increase or to improve on your trading skills. You get. I'll be leaving the link in the description. I'll be leaving the link in the description. It's a website. You'll be able to visit that website and be able to get that book. Seriously, that book also has been able to help me. For the years also I've been able to trade in the market, and I think also to be able to help you too. I'll be leaving the link in the description for the website, then we'll be able to search for that book. You get. So as we continue, this is the live chart on a euro dollar on the daily time frame. This always does not depend on the time frame, as long as if you are intraday trader, swing trader, you will be able to identify on the exact time frame you are entering into. You get. So as long as you mark what you call the market structure, you learn how to mark out structures, you'll be able to improve in the market. You get. So we talked about liquidity. We have equal loss, and this equal loss may be printed by what you call the resistance, the support, and then the resistance. There's something which here I marked out. This guy, market started from this guy, pushed up, came back to the resistance level, came back to the support, pushed up to the resistance, came back to the support, pushed up to resistance, came back to support. Here, I would advise most of the guys to stay away from such markets that print such formation or print such structures, except if the market is giving you something like a clear market structure within on the lower time frame. You'll be able to detect whereby the market will be able to go, and those may be putting the as I told you, liquidity may be either your position or a stop loss. Those guys who put their position in that area, they are stopped out and then market rejected, then push them to their direction after removing them. You get. So that's how this market always moves. So when we continue, as I told you, market continue pushing lower, giving us a new breakout structure, liquidity sitting above here, liquidity sitting low, and market continue ditched out, pushed back. This is how the market, I told you, moves up, pull back, internal, in external liquidity, internal liquidity. You get. So this is how the market really moves, leaving liquidity sitting below and also leaving liquidity sitting at below, following the trend, you get. So market push down, creating lower lows, continue pushing, creating lower lows, pushing lower lows. Market also gave us this momentum, pushed up internal, and then came back and retested, which we call the support. That's called trade support and resistance. So all demand zone, all supplies, demand and supply, you get. So market came back and then pushed up again for the sweep of liquidity internal, then pushed up, swept up all orders that were placed into this position and all their stop losses. Market continue pushing down, you get. That's how market behaves. That's how market behaves. Typically, that's how market behaves. And then market pushed out. This is what we call equal lows. Equal lows most of the time. Someone who placed an order here and their stop loss slightly above the resistance were being swept out. Yet market was sweeping liquidity, then it continued in its favor or in its direction. Someone who was selling from this point, after removing him or her, then market moved into his or his direction and then pushed down. So that's how market prints about it, and with its liquidity sweeping. As long as you learn that about liquidity, market structure, you'll be able to make it in trading, you get. All right, there's something I want to share with you, something small and just a simple tip for those who are starting forex. Something small, and this heading has also talked about physiology or mental. So one of the questions, one of my people I mentor, most of them ask me this question, that if you got a losing trade, how do you feel? Do not take personal that you have made a loss. Maybe the next day you'll not be able to make a loss, or or the next day you'll be able to make the same loss. No, do not take has it personal, you get. So my question would be, before I start this section, is that which stage are you in? Ask yourself, which stage are you in? Answer that in 1 minute. Okay, let me hope you have got the answer. So I'm going to share with you something small in this section. This is a circle. This is a full trader. A full trader consists of 8 stages. And this I'm going to share with you, and why I could still recommend you that get a mentor to help you, because that mentor, he has already passed all these stages which are gonna be able to share with you, you get. So these stages, your mentors have been ready to, you've been able to pass through all these stages. If you do not have a mentor who will be able to help you, you can inbox me, you can send me a message, or you can put a comment that need mentorship, you get. My mentorship fee always begins at $50 monthly, or be able to see how I do my analysis, how I'll be able also to help you to teach and even mentor you, you get. So be able also to receive some signals from me, you get. So this is the reason why you should need a mentor. First, this is the trader. Number one, start. That's the first stage. Maybe you saw someone on YouTube making a lot of money. You became interested. Maybe a friend referred you that in trading there's a lot of money. Trade forex, what and what. So you jumped into the academy or the industry of trading. and you put your hard money, maybe $100 or $1,000, you get. So starting from starting point into this area, yeah, from into sorry, yeah, so sorry about this. Maybe you start into this area, you get. So you put your hard money, and they start, maybe by chance or by good luck, you make some money, and then you become excited. You say, wow, this is interesting, I'm gonna make it, you get. So the next day, due to the excitement you have got, you are going to come into this stage, or the next day, or some month, or some days, all the money you have made, it's going to go down, and account, boom, brown, or all the money I've made have been taken back into the market due to bad risk management. And then you said, hey, no, last time I made this, you go, maybe you go on YouTube, also learn, you go back and also do some simple researches, then you come back in the market, more losses. Do you know why? More losses. So those now stage number 3. That's stage number 3. Then you continue to this area of losses, and then you go back, you fund the accounts again. I said, no, I need to make this money. Maybe you go to YouTube again, someone also motivates you. Maybe also you get some small details about trading. Again, you come back, yet you are not yet to master your mistakes from the beginning. So you come to the second phase again, you do more losses. You said, hey, what's going on in this trading? Yet you begin with excitement, and then you end it. This is the time where some people fail into trading. I said, I never do trading, this is a scam, what and what. Yet someone has not mastered his mistakes from where he or she began with. And then you went back to YouTube, or you got some other content from anywhere. So you come back, you went back to basics. Okay? From this area, you came back into the basics, there. So when you went into the basics, then you learn. After learning something in a good time, then you come back to the market, and then you placed orders. When you're placing orders, this is where you see a setup, then say, market is leaving me. Boom, you set a position. When you set a position in this area, due to panic, and then the trade goes against you, more losses set in. And then once in this area, you get maybe you decide, let me purchase for mentorship, let me purchase someone to mentor me, to hold me, uplifted me. This is the time where you start to make some good money. This is the time whereby you move. This is the time whereby you move from panic to the 7th stage. This is the time whereby you realize that the game you came into, it's a game of slow movement. It's not a quick get scheme, but it's a slow movement. You move by step. But all from the losses you have made from stage 1 up to stage 7 you're in, it can be regulated as long as you get a mentor, because that person who's gonna mentor you, he has passed through all the stages market supposed to teach you, or you're gonna learn by yourself. As long as if you are incapable to get a mentor, learn from the mistakes you are making. Each trade you place, try to analyze why you fail that trade, why the trade goes against you. Then this is where I start getting performance by the mentorship. But all these stages can be skipped from the start up to the performance stage, as long as you get a mentorship. Yes, as long as you get the mentorship. However, losses will be more minimizable than someone who began from the start up to reaching the stage 7 you get. So that's why I recommend you guys. I'm gonna leave a link in the description, a website that will be able to help you to get that book. You'll be able to pass through that website, and then we'll be able to ask for the book or to download the book. So that will be able to help you, to guide you into trading you get. And also it will be able to support you in this, to learn. Also, if it's possible and you have some money, you can get a mentor, or you can inbox me via my social media platform, or you can send a message maybe within that website. Maybe they'll be able to communicate to me, maybe, or you can get anything where you can be able, because I'm always everywhere, social media, Facebook, Twitter, TikTok, WhatsApp. You can DM me a message, then I say for mentorship it's only $50, where you can be able to start with us. The link in the description for the website, and then I'll be also to showing you a brief moment of the book, and how the website look like you get. There are two websites. You'll see a link also taking you to the main website. So within that website you get. So thank you guys. Please share this video if you gain value in this video. Like, comment, share, subscribe to this channel. Yes, so that YouTube will be able to send to other people. Yeah, thank you. Have a blessed day. Have a blessed trading you get. Stick to your strategy. Stick to your point. Okay? Yeah, thank you. Meet you next time. ThinkTankStormFX, your boy. Okay, this is the link. This is the website. Yeah. This is the website. You can be able to get the best from this website. Yeah, there are also other offers in this website. So everything, this is our content. Please subscribe to get this book as early as possible. You get. Yeah, thank you.